Welcome back to Liberty and Finance. We have a first-time guest today. This is Kyle Floyd. He's the chairman and CEO of VOX Royalty Corp. He's joining us this Monday, April 19th, 2021. Kyle, thank you for coming on to Liberty and Finance this first time.
Yeah, it's our pleasure. Thank you so much for having us.
We've been interested in royalty and streaming companies ever since interviewing Rick Rule from Sprott Asset Management, now of Rick Rule Media, who keyed us into the fact that there's a big difference that people need to be aware of about what makes royalty and streaming companies different from mining companies, how you kind of get the best of both worlds of participation in the benefits without necessarily all the costs, etc. So I'm going to ask you about that a little bit, but first I wanted to get a chance to get your insider's view of the macro environment that we're operating within right now. That's one of the reasons our channel was originally founded, was a lot of our viewers are concerned about the economic exposure and the financial dynamics that we're operating under right now and how they can take concrete steps to take care of their families, both from an investment standpoint and a risk reduction standpoint. That's why they're interested in precious metals and sound money, that sort of thing. But specifically from your standpoint in the industry related to mining and the royalties that come from that, what are your main concerns or your main observations of what's different? What's the most important differences right now from average times in this economic and financial environment that we find ourselves in?
Yeah, I think we're in unprecedented times, to be frank. And I think for your viewership, it's the right time, certainly, to be building positions in what I believe are going to be the securities and the investment opportunities that present, given these unprecedented government spending, infrastructure bill. The backdrop to commodities, I don't think has ever been more favorable. If you look at what happened, you're starting to hear others talk about a second super cycle. And when you look at what that really means, that was when China had tremendous, closing in on double-digit GDP growth and really investing heavily in infrastructure. Apples to apples, if the U.S. is making those kinds of investments, I think that is actually much bigger, larger fundamental demand in commodities than maybe what we even saw back then with China in the early 2000s going through their really what was creating the super cycle. And so overlaying that and the backdrop to that has been the almost unfathomable amount of government spending. And those two factors, I think, compounding on each other are creating what I believe will be a very, very bullish cycle fundamentally for commodities. And we've positioned ourselves ahead of this curve and ahead of this, what we believe is going to be a very strong uplift in terms of commodity prices. We've positioned ourselves ahead of that. And so as a royalty company, we're able to sit back and let our assets and our royalties mature without investing any more capital into the growth of those assets, but realizing the benefit of the growth of those assets. And so from a VOX and a royalty perspective, I believe we present a very unique opportunity for investors to both realize growth and the defensible characteristics in a portfolio of owning a very favorable basket of commodities.
It's interesting because when we spoke with Pamela and Mary Ann Aiden from the Aiden Forecast recently, they talked about a gold mega trend or mega cycle, and you mentioned a super cycle, and they also talked about commodities and some of the base metals and that sort of thing. So it is an interesting combination because there's this, I guess we called it the perfect storm when I talked with them, because we talked about how you have this big, battered down, locked down global economy now emerging from that, and people trying to get materials for home construction and all electric vehicles, all kinds of things, and that's driving what they were describing as a lot of demand for some of these base metals and other commodities. But then layered on top of that is the flight to risk reduction on the part of many people wanting to invest in precious metals. So you've got all three of those things: the government runaway debting and increase of the fiat money supply that people are wanting to protect themselves from into precious metals, but you've also got the base metals exposure with commodities. So if you look at that environment, one of the things that our viewers have been concerned about, or at least watching closely, is the languishing price of precious metals relative to other commodities. I think silver is probably what's been identified as the only commodity that hasn't surpassed its previous all-time highs set back in 1980. So how has that affected the mining industry and those miner operators from whom you derive royalty or streaming benefits? The low price comparatively to the rise in other resources. How has that impacted the mining industry and the royalty and streaming industry?
Well, I'll talk about it at a high level first, and then I'll talk about how it really impacts VOX and our shareholders and our opportunities as it's a little bit of a divergent path. One, I think truly is, I think cryptocurrency has taken some of the demand as a hedge against fiat currency risk. I think that's taken some dollars, frankly, out of the pool for gold stocks and silver stocks and absolute demand of buying physical. That being said, I think all of your viewers and you and I certainly appreciate the world is cyclical and it's coming back. And when it comes back, what shoe drops that creates that really significant demand and speculation again in gold and silver? I don't know what's going to cause that, but it's going to happen. And gold and silver, look, the same expenses that are going to create, I would say, inflationary pressure in pricing and absolutely just operating mines around the world is the same for gold mines as it is for base metal and consumption-based metals. And so that's inherently driving up what's going to have to be the prices of precious metals. They're going to have to stay in line, from my perspective, with the base metal and industrial and consumption metal prices. It's just otherwise you're going to be taking so much supply out of the market because their prices are going to come up. That's what you see in these types of cycles. So I do think that we're going to enter a period of speculation that really drives the prices of gold and silver significantly, and that will stay in line, if not surpass, what you see in other consumption-based metals, true industry-based metals. But from a VOX perspective, one of the things that's really benefited our portfolio, and I think it's helpful for me to pass along to your viewers, is we have so much exposure in Australia, Western Australia specifically. Australia as a whole is the second largest producer of gold on the planet. And we have the second largest holding of hard rock mining royalties, most of that being gold, after Franco-Nevada on the Australian continent. And what we've seen is gold, in terms of, it's been at all-time high prices when priced in Australian dollars now for 3 to 4 years. That has meant that all the assets, all the royalties that we purchased are getting the benefit of a really buoyant, uplifted cycle in gold and precious metals specifically. So it's been very helpful in terms of creating an upswelling of fundamental and organic catalysts within our portfolio that our investors benefit from. So we don't have to put any further dollars in to see that growth. But that is, you're seeing really still a very good cycle for gold and silver, while maybe some of the other metals have maybe rallied on a percentage basis a little bit ahead. I think gold and silver will catch up.
You mentioned in passing about the Australia and other jurisdictions. Risk is one of the things that our viewers are very concerned about. That's why originally our channel came from being called Reluctant Preppers, because we were talking about preparedness, risk reduction at the household level, and then looking at it how the just different jurisdictions that people are living within can bring different levels of risk. So when they're considering investing, they're very cautious. Typically, they do want to have gains and growth, but they don't want to do it in a way that exposes them unnecessarily to high risk. So can you talk to us about what you look at in terms of evaluating the risks of different jurisdictions in which to make these royalty and streaming arrangements with different mining operations or even discovery and exploration operations?
Absolutely. And I think your viewers are on solid ground when they're truly evaluating the commodity space and evaluating the risk attached to owning specific types of securities in the commodity space. And one of the benefits of royalty companies is that we're very well diversified. VOX specifically, we have more than 50 royalties and streams now. And we have the majority of those, 80% of those assets are in what we would call tier 1 mining jurisdictions, Australia and North America being Canada and the US. And so for investors really looking for risk mitigation, VOX is giving you exposure over 50 plus assets, 50 royalty assets, and mainly tier 1 mining jurisdictions. And I think that's a key point to really emphasize is you want to make sure that your assets are in safe hands and in a stable jurisdiction so that when they are entering production, like what we have in our portfolio, that you can really count on that cash flow and count on that growth for your investors.
Rick Rule, again, was one who introduced to our audience the distinction that he makes, that he thinks is very important for investors in the difference between mining companies that operate mines versus royalty and streaming companies. And we've talked about it with others such as Sandstorm Gold, but could you underscore for our audience so that they help us all to really understand Why is it that Rick Rule and others say that people need to understand the benefits of owning shares in a royalty and streaming company as opposed to just mining company operations? What risks is it that mining operations are subject to that a royalty and streaming company somehow is less exposed to?
Yeah, I would say that the key fundamental risk that royalty companies don't share with mining companies is the risk of prices increasing and needing more capital to fund the growth of their business. Royalty companies are exposed to the top line revenue of a mining operation. So when we say we have a 1% NSR, what that means is we take 1% less some very nominal deductions of the revenue that's produced from that specific mining operation. So when that mining operation and the mining company that owns and operates it says, look, we want to go expand production, or we want to go invest in a satellite deposit, whatever the reasons for capital might be, we get to keep our 1% revenue interest, and it's undiluted. We don't have to participate in those financings. We don't have to give additional capital. So VOX and our shareholders and royalty companies participate in the upside without funding that upside. Secondly, I talked about the rising prices, the rising inflation. Mm-hmm. That usually has a very strong correlation with prices of commodities, but it also has a strong correlation with the cost of running mining operations. That cost increase for the mining companies is not passed on to VOX or our shareholders. And so we get the benefit of that rising inflationary pressure to the commodity prices without the downside of our operational costs expanding. So we have very high margins. It's just our team of royalty experts buying royalties essentially and evaluating royalties, and we can scale significantly without adding extra costs to our G&A, and we're not exposed to those costs that mining companies realize. And the last point of owning royalty companies is you get the benefit of that diversification. We have what we expect will be close to 10 production stage assets as we exit this year. That's huge diversification. That would resemble a major mining company in terms of number of quantity of producing assets. So we offer the investor that diversification, but it doesn't cost us a lot more to monitor those income streams coming into our business. And so there's a lot of scale underlying royalty companies' businesses that we benefit from and our shareholders benefit from.
You're making us remember Steve Stainangelo from the SRS Rockwell report, who we've interviewed, talks a lot about the energy cost coming cliff, basically that our ability for the world, the need for energy is going to be continually increasing. However, the variable supply is not increasing. And He says that people have no idea how that's going to impact so many physical operations in our economy, mining being one of those. And so this would be an example, as if energy costs spike in the next decade or whatever, that would impact the bottom line of mining operators. However, if you're taking your cut off the top line, it doesn't hit you in the same way. So I get that distinction. I hope that's clear for everyone. Now, you also talked to me about base metals exposure. In addition to the precious metals, can you talk to us about, because our audience is interested in both. They're interested in monetary metals, but they also hear both Rick Rule and Pamela and Marianne Aiden and lots of other analysts talking about the commodity supercycle and the need for base metals in the coming infrastructure build out, both from China and from the US at the same time. Right. So what does VOX bring to that table? So if you could take that in two stages, what do you see about the supply-demand relationship for base metals, and what do you see as far as your ability to participate in that as well?
No, I think, Dunning, that's a huge point to emphasize. I don't think the world has ever seen two economies the size of the U.S. and China both competing for metals the way that they're going to be competing for metals if the infrastructure bill passes. And I think most people think that will pass. And so that pressure on commodity price in an upward sense is, I think, going to be unprecedented. And so, look, I think precious metals will trade in line and will have periods where they absolutely outperform base and what I would call the consumption basket of metals. But with VOX, you get the benefit of both. We're 70% precious, and a lot of that's because it's an organic focus of ours. There's just more. We buy exclusively third-party royalties. We don't finance mining companies. We don't take that risk on. Buying third-party royalties lets us evaluate the entire opportunity set of mining operations globally that don't necessarily need capital but have royalties over their projects. And so that's what we go and buy. We buy the royalties held by third parties that aren't operating these assets. And so that gives us a huge opportunity set. And there's just frankly more precious metal royalties. So organically, our business is oriented that way. But as you mentioned, 70% of our asset exposure is precious, 30% is other. And that other is highly significant to the consumption-based, what I would say the metals that are likely to really excel in this infrastructure package, this transition from a hydrocarbon-based energy environment to a more metals-based energy environment. We're really well positioned there. And so when you own VOX, you're getting that exposure along with the precious metals exposure, which I think in this environment is very, very significant, both opportunity for investors, but also downside mitigation.
I almost cracked up at the beginning because you made me remember when you said two major countries vying for the same pool of resources. I was thinking about back in the COVID collapse and lockdown, everything of February and March of last year, of 2020. The memes that were put out there of people scrambling for pallets of toilet paper at Costco, except
Yes.
This time it would be China and the U.S. scrabbling for the iron, the copper, that sort of stuff. So very interesting. You have a provocative subtitle on your corporate presentation, the fastest growing royalty company. Is that for real?
It's absolutely for real. No caveats, no asterisks. We've been the fastest growing royalty company on the planet over the last 2 years. And it's really our business model and the competitive advantages that we've built that have allowed us to unlock that growth for our investors. But it's not just growth for the sake of growth. We're able to transact and buy and find royalties at better value than anybody else in the world right now, and we're doing it at unprecedented volume, all the while I believe trading at great value for our shareholders. So I think this is one of the opportunities and one of the companies that I believe that your viewers would benefit from really digging in on our story. But yes, absolutely, we have been the fastest growing royalty company over the last 2 years.
So could you give us a glimpse? You mentioned different jurisdictions, Australia, U.S., Canada, among others, but those are your primary ones. You mentioned 70% precious, 30% base and construction metals, that sort of thing. Mm-hmm. What other aspects of your growth should people be aware of as far as the types of assets, the types of agreements that you put together with other companies?
Sure. So again, the focus for VOX, we look for the third-party royalties all over the world, and we have one of our key competitive advantages in terms of delivering this growth and value to our investors is that we purchased a database from a company called Mineral Royalties Online back in 2018, 2019. That 7,000 proprietary royalties, these third-party royalties, all over the world. So it gave us a competitive advantage in the roadmap in terms of understanding what royalties were out there that we were able to get in front of that our competitors are more or less blind to. And so really the foundation to our business is high grading that database. In conjunction with that, we have deal sourcing agents all around the world. We're able to get in front of, it's one thing to know where the royalties are. It's another thing to be able to find the owner of these royalties. We've bought royalties from telecom companies, prospectors in the bush in Australia, doctors in remote cities in West Africa, you name it. We've found royalties buried all around the world with a disparate set of sellers that most of our competition, even if they knew about the royalty, couldn't actually find the owner of this royalty. And we've used our deal sourcing agents that are in most major mining jurisdictions to help us find these owners of royalties. So we've had just an amazing success story about finding unknown royalties and being able to transact on those at very good value. And so the other key part of our success has been we have a very technical team. Your viewers, you talked about your viewers wanting to mitigate risk. In the commodity space, a lot of companies out there that can tell a good story, but they are not actually delivering on the fundamentals and the risk and truly discerning risk for their shareholders. Our key business development executive team is made up of mining engineers and geologists, and sometimes they're both. We have one of the most technical oriented teams for any royalty company sub $1 billion. And they're the front lines of our business. It's not outsourced. It's not a consultant that you pay and they tell you what you want to hear. We're evaluating quality of asset first, the royalty that overlays that, and then the value that we're able to buy that royalty at for our investors. And that's really key for your viewers to understand. We have the experts doing the work for you, making sure that we're buying at good value. We're growing at unprecedented rates, but we're growing at unprecedented value as well. What we're doing specifically in Western Australia, where we have the second most royalties of anybody, most of those gold, is we've created a first mover advantage, is the best mining jurisdiction on the planet, and we're finding great value in doing so. It's like what Franco was able to do in the late 80s and early 90s in Nevada. We're doing that in Western Australia, which right now, by most objective rating agencies, is the best mining jurisdiction on the planet.
You made me smile because we often ask, I like to ask people who are involved in the discovery and exploration business, how do they get to be a treasure hunter? But then you took it to a different level when you said you have this ability to, you're basically exploring and treasure hunting within those who own those assets. So there's the people who own the assets, and then you know how to reach them. And so that's where you're doing the treasure hunting, is finding those who can connect you with that royalty stream for those assets. It's fascinating. If people want to find out more specifically about VOX royalties, where should they go, and what will they be able to access there?
Sure. Our website's a good first port of call. So it's voxroyalty.com. We have some very good independent analyst coverage on VOX. Some of that we can share with certain viewers that are interested in that. So send us an email to ir at voxroyalty.com, and we can certainly pass along some of that information. But for your viewers, I think to understand really at VOX, they're finding us at an inflection point. We went public with one production stage asset. Again, when we talk about mitigating risk and finding opportunities for your viewers, we went public May of last year. We've been around for almost 8 years now building our business. So we're no new entrant to the royalty space. And I think that's a key point of differentiation and understanding. Went public with one production stage asset. We focus on finding assets about 3 months to 24 months out from production. It's where we find very good value for our shareholders. We now have 5 production stage assets. We believe as we exit 2021, we should have approximately 10 production stage assets. We're growing exponentially in all the categories that matter for a royalty company. And you're finding us right now, I think, at a very good point in the value cycle of our shares and where we're going. So voxroyalty.com is a great first stop in terms of understanding our business and allowing us to also pass on more information.
That's great. And I also noticed that you've been around since 2014. We started in December 2013. So our viewers who've been around since then have been around about the same amount of time watching this channel as you've been doing what you've been doing. And it may be a good matchup for them to find out more. So anyway, folks, check that out, Vox Royalty Corp. And we'll put the links to all of the information in the description of this video. If you like this video, make sure you give it a thumbs up. Also, don't forget to subscribe and check out the info available at voxroyalty.com. We were thanking you, Kyle Floyd, for being here this first time with us on Liberty and Finance.
My pleasure. Thanks, Dunnigan.